All right, let's talk Ferguson. The company just dropped its latest earnings report and boom, the stock shot up almost 8%. Now, a move that big, that fast, that tells you Wall Street was caught off guard. In this breakdown, we're going to dig into exactly what happened and, more importantly, what it means for you going forward.
So yeah, let's start with that number. A nearly 8% jump on the day they announced. That's not just a good day. That is a massive reaction. It's the market screaming, "Whoa, we did not see that coming." This is the kind of surprise investors love to see.
And here's the thing. This wasn't just some flash in the pan. If you zoom out, you'll see Ferguson has been quietly crushing it, outperforming the entire industrial sector for a while now. They've been building this foundation of strength, and this quarter, well, they just lit the fuse. So let's get into what was in that report.
The core story is actually pretty simple. Ferguson blew past Wall Street's estimates, and the stock took off like a rocket. So in this explainer, we're going to peel back the layers on the key numbers, the strategy that's clearly working, and what you should be watching for next time around.
Okay, here's our game plan. We'll start with that big headline beat. Then we'll look at the real powerhouse behind these numbers, the non-residential engine. After that, it's all about the future, guidance and strategy. Then we'll pull out the key investor takeaways and wrap it all up with our final call on the stock.
First up, the headline numbers. And let me tell you, this was an absolute clinic in outperformance, just decisive across the board. Look, this is what really got everyone's attention. The consensus on the street was for earnings somewhere around $3.29 a share. On the high end, Ferguson came in and dropped $3.48. That isn't just a beat, that is a blowout. This is the kind of number that makes algorithms go into a buying frenzy.
And it wasn't just a magic trick on the bottom line. The top line was super strong too. Revenue hit $8.5 billion, up almost 7% from last year. But here's the really impressive part. Their operating profit jumped over 13%. So what does that tell you? It means they're not just selling more stuff, they're selling it more profitably. That is a sign of some seriously sharp execution.
So the big question is, how? How do they pull this off, especially with all the chatter about a shaky economy? Well, the answer lies in one part of their business that acted as the real engine this quarter, non-residential.
And this right here tells the whole story. You've got these two sides to Ferguson's business. On one hand, the residential market, which is half their business, was basically dead flat. But on the other hand, non-residential just exploded, up 15%. Management saw the housing market headwinds coming, and they clearly pivoted hard into their commercial and industrial strength. This is a textbook example of a diversified business model just paying off big time.
And when you dig in, you see this growth wasn't just some vague trend. It was super concentrated. Commercial mechanical was up a staggering 21%. Waterworks up 15%. And on the earnings call, management got really specific. They pointed to huge projects. We're talking data centers, new hospitals, and massive manufacturing plants. Think about the AI boom, right? All that needs data centers. That's where the big money is going, and Ferguson is right there to catch it.
Okay, so that was the quarter that was. Let's shift gears and look to the future. Section 3, Guidance and Strategy. What is management telling us about the road ahead?
First, a little bit of housekeeping that's actually a really smart strategic move. They're changing their fiscal year end from July to December. Now you might think, who cares? But it's a big deal. For one, it lines them up with their competitors, which makes it way easier for us investors to compare apples to apples. And two, it moves all that year-end administrative hassle out of their busiest summer season. It's just a smart, practical move.
And with that change, they give us a fresh set of guidance for the 2025 calendar year. They're calling for mid-single-digit revenue growth. But the really key number here is that adjusted operating margin, between 9.2 and 9.6%. That's them signaling very clearly that they expect that highly profitable non-residential business to keep leading the charge. That's a confident outlook.
And you know, they're not just talking the talk. They returned $189 million to shareholders just in the fourth quarter through stock buybacks. A company doesn't do that unless management and the board are extremely confident about the future and believe their stock is a good investment. It's exactly what you want to see.
All right, let's move on to my favorite part of any earnings call, the Q&A session. This is where you get the unscripted truth, where you can really read between the lines.
Management was definitely bullish, but they weren't wearing rose-colored glasses, and this quote is so important. They were straight up about the fact that growth might cool off a little bit, and they pointed directly to the ongoing weakness in residential construction. You know, that kind of honesty actually makes their optimistic forecast even more believable. It shows they have a realistic grip on the market.
So if you boil down that whole Q&A, it really crystallizes into 4 key themes. 1, those residential headwinds are real and they're not disappearing tomorrow. 2, the pipeline for big non-residential projects, especially things like data centers, is still looking really, really strong. 3, those amazing gross margins are probably going to settle down just a bit, which is totally normal. And 4, on the HVAC side, people are feeling the pinch, so they're choosing to repair their old AC unit instead of buying a new one. A really balanced picture.
And all of that brings us to our final section, the next call. We've seen the numbers, we've heard the strategy, so where does Ferguson go from here?
So after a quarter like that and a stock pop that big, this is the multi-billion-dollar question, isn't it? Can they keep this momentum going, or was this just a fantastic one-off performance? Let's get into our analysis.
Okay, here's our take, plain and simple. First, on the results. We think this story continues. The powerful non-residential business will keep offsetting the weakness in residential. That's their winning formula right now. Second, the stock itself. After that huge jump, you gotta expect it to trade sideways for a bit, to consolidate. But as long as they keep delivering on those big projects, we see more room to run. And that brings us to our official rating, outperform.
So, how might you play this theme? Here's an interesting idea, a pair trade. The idea is you go long on Ferguson to bet on their excellent execution and their strength in non-residential. At the same time, you could short a group of companies that are only exposed to that weak residential market. It's a trade designed specifically to profit from that split, that divergence in the market that Ferguson is navigating so perfectly.
And of course, we always have to say it, this is not financial advice.